Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is the 26th, Wednesday, the 26th of February, 2020. And welcome to the show. You know what, guys? Credit markets are starting to freeze up. There's been such a huge impact of global trade problems, that supply chain distribution problems, businesses not being able to get parts that they need and stuff like that, that it's starting to translate itself into the economy now. And well, anyway, let's get started. Let's open up the charts right here and let's take a look at this. Credit investors have been rattled by the potential impact on company earnings from disruptions caused by the virus, which is a huge part of global supply chains shutting down. While markets have yet to see the panic selling, a derivatives index that gauges credit market fear in the United States has its biggest jump in more than 3 years on Monday as investors rush to hedge against wider sell-offs. So this is a pretty serious situation in the credit markets. It says Honeywell International and Virgin Money, UK PIC, and Transport for London were among the European borrowers readying deals before the financial market turned hostile. Before the slowdown, Europe had seen 239 billion euros of bonds sold in January alone. The U.S. investment-grade market was expected around 25 billion worth of sales this week before the virus fears froze the market on Monday. Excluding the December holiday season and typical 2-week summer hiatus in late August, there hasn't been that long of a break since the week starting on July 2018. You know, this is all just actually getting started. These fears in the credit markets and these freezings of the credit markets and this is all actually just beginning. The Dow's starting to tumble out of bed. You know, the last couple of days we've seen quite a markedly large sell-off in the Dow, but you know, you haven't seen nothing yet. I think we're going to see one-day totals that are going to be bigger than all we've seen so far, you know, coming very soon. And this is just the start. The credit market's starting to freeze in between the interbank lending and stuff like that. What's going to happen next is this credit freeze could start to extend outwards. And what I mean by that is you might have trouble actually getting your money at a certain point with this as it starts to grow bigger, you know, the credit freeze. A credit freeze right now is in the higher end of the system. It hasn't extended out to the lower end of the system where it's going to start to freeze all. Because actually, a lot of times, you know, when you use your credit card or you use your card at the ATM, you know, that's an extension of credit, you know, and all money now is credit. Even the money you have on deposit is actually credited with the bank, you know, and a credit freeze can actually extend outwards further and further until it starts to actually affect common, ordinary citizens trying to get some money out of an ATM machine, ultimately in the end. So what we're looking at is the beginnings of the rumblings or beginnings of something that is much, much larger. This freeze in the markets, global markets seize up as coronavirus halts bond sales. You know, this is gonna get bigger. I can see the potential of this. You know, in just a few more months. I'm going to say we're in the countdown now. Less than 90 more days before the markets are all closed. In my estimation, you know, that's what I see coming. I see the markets actually closing. The Dow and S&P 500, all of them closing around the world. The bigger markets in Asia and everywhere closing. Markets closing. Let's take a look at silver today. I can actually see cryptocurrency seems to run and trade no matter what happens. But they can close the gold and silver windows in the gold and silver markets too. They can close it. $17.85 right now for silver. Ridiculously cheap. It's down below $18, you know. It's down 8 cents. I'm a little bit amazed by that, the fact that we're in this much trouble and silver and gold are still taking a beating. 16.32 for gold. It's down $2 on the day. It's a little bit amazing, you know, that investors aren't manic rushing in. I'm really kind of surprised and shocked that investors are not running into gold and silver right now as a safe haven asset. You know, it's a little bit shocking because we're going over Niagara Falls and they should be in panic mode right now. And they should be buying up and snatching up gold and silver. And this is what I expected when they started to go over Niagara Falls would be that they would turn to gold and silver, but they haven't quite yet. I'm waiting to see what's going to happen with this. Let's take a look now at cryptocurrency market capitalizations, and we see them really dumping cryptos today. We're in the middle of a dump, 255 billion. I mean, we were up like 280 billion there. Now it's 255, 64.5% Bitcoin dominance. And that's a bad sign when you see the Bitcoin dominance rising. It was down like 62, and now it's 64.5. Bitcoin's off 4.64% today. It's almost ready to go down below $9,000. So Bitcoin was that feather in the wind I told you about yesterday, you know, and I guess we see which way it's turning here. It's turning downwards. We're looking at downwards prices and downward spiral on all of these coins here today, you know. It's taken more of a beating, a little bit more of a beating than gold and silver is. Let's take a look now at the Dow. So we're up 317 points on the day. But, you know, I think a lot of this is, you know, traders are going to still try to buy on the dip. They think, okay, this is all going to blow over. Well, there's going to be a certain percentage of them out there that's going to think it's going to blow over. I don't know how miraculously how it actually works is it's a type of thought that we humans have where we always see the cup half full. It's something that is inherent in our nature with a lot of people is they always think that things are going to turn out for the best and things are going to turn out on the bright side and things are always going to be okay, you know, no matter what happens. Even if evidence is pointing them right in the face and staring them right in the face, they'll tend to disbelieve. And then they'll go out there and they'll see that these stocks are down a couple thousand points and they'll say, hey, you know what? This is ready to snatch up. I'm going to make some money, you know. And anyway, I think it could take a big reversal later in the day, you know, because ultimately the news is what the news is, and it's bad. And that is going to start to, even the most optimistic person out there, after a while, that bad news is going to start to seep its way into their consciousness and into their conscious reality to the point where they can't deny it anymore, that the news is bad. And they'll turn around and then they'll start moving in the opposite direction again. So anyway, that's that for the stock market. Let's take a look at oil. Oil's up 23 cents on the day, $50.13. Hang in there, oil. Let's take a look now at the U.S. Treasuries. And we see a little bounce in the yields here. Yields are rising a little bit today out in the long end of the yield curve. The traders are changing direction right now. Now, this is something we should be watching very carefully, is a possible change in direction in Treasury yields. This is massive amounts of money. This is the biggest market out there. I mean, it's like trillions and trillions of dollars size market, you know. And the gold and silver market actually are tiny little markets compared to the Treasury market, you know. And a lot of money's been pouring into Treasuries lately. Well, you know, today a little bit of money's pouring back out of Treasuries. Investors right now, they don't know where to go. They're jumping from the frying pan into the fire, you know. because they don't know where to go. That right now they're kind of like at a point where capital right now is like they want to find a safe place to stuff their money. You know, all their ill-gotten gains that they've had over the last so many years, you know, from actually robbing from the poor to pay the rich. Just exactly the opposite of Robin Hood. And they've got all these ill-gotten gains, and they want some place to stuff it. And they're running out of one thing and into another because they're scared. They're really scared right now. Let's take a look now at the dollar index, 99.19, and she's going along sideways today. So anyway, very interesting what's happening in here, you know, and things are really moving fast, really fast right now in the global markets, you know, and there's a bit of a credit freeze going on, but things are just beginning to get rough out there. And you guys stay tuned because I'm going to try to keep up with it here, and I think it's going to come fast and furious over the next few weeks, you know, what's happening within these markets. It's all starting to unfold right now. Things that I've been talking about happening for years now is actually starting to happen. All because of this Black Swan event. Bye-bye, guys. You guys have a great day, and give me a thumbs up.